I need to pull up, bring that over here. And then we need to test and see if the audio is there. View channel, boom, boom. Here we go. Let's give it a listen. I need to coming through loud and clear. Wonderful. Perfect. All right, guys, this is the Climb to One. We're doing something different today. All right. 3 different times in my life, 2 times and now. All right. 2 previous times and now. I've gotten into stock trading. The first time was my first tour in Iraq, and a buddy of mine, Jason Shosi, and I, we started investing in our own accounts or whatnot. Then a few years later, for about 2 years, I went really hard into dividend investing. Now, understand there's a difference in investing and trading, all right? Trading means just that. You want to trade. You're not so much buying and holding. Investing means that you want to park that money and let that money make you money over time. You're going to hear people in finance, especially in stock, and especially on streams and YouTubes, and they're going to be in one camp or the other, and everybody's going to have their camps. You're going to have your dividend investor, even within traders, day traders versus swing traders. That just means day traders are looking to trade a lot of times and they're looking to trade daily. Swing traders means, we're breaking it out. We're looking at like week long, 2 week long, month long, and we're doing our deals in those parameters. All right. It's the same thing. It's a different time frame. You will have guys that swear you have to be a day trader. You will have guys who swear you have to be a swing trader because day traders are crazy. It's too much volatility. Manage the volatility. Boom, boom. Just so I go over on the investing side. Dividend investing is for idiots. Don't you know that they take those dividends out of the stock price? Yes, I do. But the valuation of a company is not the stock price. So even though it went down when it paid you the dividend, I looked, and now it's up 7 cents today, despite the fact that it paid dividends. So it's not these hard, fast rules that people think. They have their camp. Here's the most honest thing anyone is ever going to tell you. One, not going with my own advice here. One, the most important thing is if you don't have the time to do research, don't trade. Don't individual stock invest. Get an ETF or get somebody to do it for you. A professional, not someone on YouTube, a certified freaking professional to invest for you. If you have a job that gives a 401k, use your 401k. Yes, invest into the 401k. The company tends to match. The variation of matches are different depending on the company. Some give really good matches. Some do really good 401k contributions. That is basically free money. Do it. Do it. If they're going to match you, do it. Okay? Most people are never going to be successful at trading, and I'm not going to say I'm successful at trading. All right? I'm not here to show you the secret way to make $1 million in trading. I haven't made $1 million in trading. I profited both times I've ran my accounts, but both times I've ran my accounts, I was doing other things in life to where eventually I had to sell my accounts off. This time it was moving down here to Dallas. All right. I liquidated my account to have enough money to move down here to Dallas and do all the big life changes that I wanted to do in that interim. The time before that, I was in a marriage, and the colloquial we were, no matter how much I made, every time I got a raise in the military, and that included like deployment. So not a real raise, but like, bonus pay for a finite duration, our spending went up. But that's a whole other matter, right? Life issues. So then when I came back and we were putting a house up, hey, let's go get a house. Let's go get this mortgage. Let's start trying to get some property and live the American dream. Also a dumb idea. I was in the Army. Most people aren't going to stay long enough to own a house anyplace in the Army. You're going to be gone in 3 years. No, I wasn't. I stayed in the same place, Colorado Springs, for 7 years, outside of the 2 years that they sent me to Iraq, obviously. But most people weren't going to get 7 years at a place, at one station in the Army, right? So again, I wasn't thinking smart. But I was thinking, hey man, I sure would like to not be living on base. And hey man, I sure would like to have something of my own. So like, yeah, I get it. I understand. Probably wasn't the best decision. Well, we put it on auto pay and boom, boom, things flip. And I look and I get they take the whole thing out all at one time. We didn't really understand how things were processing. And my first check from the military after getting the house was like $10, and we had bills and stuff. So here I am, selling a lot of stock. And then once I sold off stock, I was like, man, I'm not even feeling it anymore. And I just sold the account. I sold the rest. So, you know, situations like that. So that's another thing. Make sure if you're going to invest or if you're going to try your hand at trading, you're not putting in anything, just like I would say about gambling, that you can't lose. But also make sure that you're in a position in life, because these things compound over time. And that's any of this stuff. Obviously, dividends compound over time. But if you're just going to, like, look at the start charts, they go from here to here in general. Now, you might be in a 5-year span where it does this. Just what a time to be alive, right? Your birth date and your birth year just didn't coincide with the up and right. But overall, up and right is where it goes. So if you can put money in, no matter when you put money in, if you can just wait it out, it should be more at the end. That's how this tends to work. So if you're doing the dumb thing that I'm doing, where you get into the market and you get out, now, let me give me some credit. I didn't have to sell on lows. So I made money every time. That's awesome. That's fortunate. Some people buy high because they don't know it's going to be a downturn. Who knows, right? And then they get scared. And if they'd have just held, sucked it up and waited, it might have been 5 years later, might have been 10 years later, they would have eventually profited. But they got out. They got scared, right? So don't put anything in that you're going to need back. This is money that you want to stay there and grow. So as part of transparency, a lot of these gurus and stuff, they only show you specific trades. I'm only going to do 2024, and I just started January 31st with my first buy order. We'll go with the first trade. So I'm just going to show you 2024 with the Robinhood. I had this Robinhood previously. I had Robinhood, Webull, and Share Builder the last time I was investing up in mass. And okay, let's get into that. Why did you have 3 accounts? Well, Share Builder is one of those things where you put in, hey, once a month, I'm going to put in this much money. These are the stocks I would like. And it's very hands off. You set some stuff up and then you don't go in and set, oh yes, exactly this mark valuation. No, it just doesn't. Hey, it's the first. You put $100 in. You said you wanted 50% of this, 50% of that. We're going to spend that $100 the best we can on it. Boom, here's your shares. Not the best way. You could never day trade like that. You wouldn't even want to swing trade like that because you want to do, you don't want to do market orders, right? Because market orders is whatever the market is at the time. And since share trader is like, yo, sometime between 9 and 11, we're triggering this trade. Well, a lot can happen to that price between 9 and 11, and you're not locked in at any one price with that. But I didn't care as much because I wasn't trading. That was my dividend account. The only thing I bought on that account was dividend stock. That was it. And then I also used it to learn about leveraging. I got enough money in there that I could leverage. So that was good. Now we'll flip over. Well, why did you have Webull and Robinhood? Webull and Robinhood served the same purpose, but they were, think about like coding. Why did you do Unreal 5 instead of Unity 3D, right? Why did you do Godot? Well, we can look at, take Share Builder, and we can look at that like a, how would we say, item-oriented scripting. So I know you can code in Game Developer too, but let's say I was using that for the plug and play ease of Game Developer 2. Game Maker 2, sorry, not Developer. All right. But now I wanted to try to tinker under the hood and learn a little bit about a more complex engine, a more code-driven engine like Unity and Unreal. Well, that was Webull. And that was Robinhood. Okay, well, why are these more complex? I just told you that with my game maker share builder, I would set up pies and say, hey, distribute to how my pie is set up. And here's the money. Boom. And that's it. We're done. We're done. And then I just go back every month when the money goes in. Hey, what'd you buy me? Oh, hey, what were the dividends last month? Boom. Very hands-off, very easy approach. But what was I not doing? I wasn't buying and selling calls and puts. I wasn't doing any trading at all, right? Whether it was swing or the day variety. I was just buy and hold dividends and let that stack. And I wanted to learn more. So what are the differences in Webull and Robinhood? I didn't know. I had no clue. So I got them both. And the idea was, hey, these are accounts are essentially going to do the same thing. I'm learning which engine I want to use more. Now, if you're a guy with 17 monitors, probably Webull. If you're new, probably Robinhood. And there's reasons for that. Robinhood was designed to get new investors in, right? To get people who are new to stock trading into stock trading. Been some things here and there of Robinhood. There was a big, when GameStop was having their big thing, and a lot of people were trying to short, and then the stock bros decided to fight back, and that was a beautiful thing. They've made a motion picture, a Hollywood movie was made off that, guys. That's amazing. I got to remember the name of that. Dumb Money? Was it Dumb Money? Yo, I got to watch that. I missed it in theaters. Like, that's got to get out, and I got to see that. Oh, man. But that was neither here nor there. When that was happening, something happened with Robinhood where they froze trading for a little bit, and that pissed a lot of people off. And they froze it specifically with like GameStop, right? And there was like, well, who are they partnered with? Who they work with? Yada yada yada, stuff like that. So now we're going to get here. We're on Robinhood. This is 2024 only. This is small money, guys. Understand that small money. I'm not sitting here trying to, oh Lord, I'm not even trying to give you advice. What I'm going to do is show you what I have done, everything I've done, show you the results each step of the way, give you an idea on my thought process, okay? This is for a little bit of education, and this is for entertainment, but this is mainly for transparency, because what I'm going to do, guys are going to do on YouTube and on their streams, but they're only going to do it for their winners. Remember, this is a brand new account. There's only 2 stocks I've been involved with on this account, and they've been minor winners, but actually, I'm going to say minor. The first one is Tiddly okay? And that's the one that we're going to do first because chronologically it came first. The second one is doing something, but we're working on such small dollars that something isn't a lot, okay? It's not. So let's get started. To let you know, I'll tell you when I interjected the extra cash, I put $100 total in. I started at $50. So let's see what we've done, all right? This is the start, January 22nd. This is what we're focused on, a company called Edgio. Ooh, tell me about Edgio. I can't. I don't know shit about Edgio. Why would you buy a stock you don't know anything about? Well, you probably shouldn't. Hence this not being financial advice. I don't know anybody in their right mind that would tell you to buy a stock that they don't know anything about. Well, then, thought process this for me. Look, man, I was looking for a stock cheap enough to get in and bet on selling a call option, which means that I need 100 shares. We're not going to get into the heart and soul tutorial on calls and puts, okay, on options. But know this, a small bit of education. You need 100 shares. Options work in 100 share blocks. If I want to sell options or puts, I need to have 100 shares of the stock that I'm wanting to move with. And there are covered calls and stuff like that. That's a little more complex, okay? We're not there. We're not doing that. We're saying if I'm going to sell the options, I'm actually going to own the stock, have it in my account. So I need 100 shares. Well, I just told you small money, right? I put $50 in the account. How am I going to get 100 shares of something? That's why we went with EGIO, EGIO for the ticker, because it was stupid cheap. And I was just going to go in, tinker on the hood, test things out. That sounds a bit like gambling. Yeah, basically this was gambling with 50 bucks. What it was. Gonna be honest. I'm not gonna sit here and tell you, oh, I went through the numbers and checked out the matrices and I really thought that EGIO was. No. I needed 100 shares of something to try to get into the call action. That's what I needed. That's why EGIO. EGIO was 24 cents. I didn't just want to be able to have one block. I wanted to have 2 blocks. So I was able to buy off my $50, 200 shares at 24. Okay, what does this mean? Well, we put in $100. Can you see the calculator? You can see the calculator. Good. Had to make sure my screen's capturing the whole picture. So 200 shares times 0.24 comes out to $48. That leaves me $2 in the account. $48 has bought this order. Well, how did I get it at 24 cents? What happened there, right? Well, let me show you. Let's just go to EGIO, right? I can't actually execute the trade because my money is already locked up, right? I'm sitting on 197 shares of something right now. I only have $1.35 buying power. So guys, buy EGIO. Order type, buy order limit. Order type, buy order. Shares. So what does this mean? This means that the market is currently at 23 and a quarter, 23.2 cents. 23 cents, obviously, and then fractions of cents. Yeah, man, some stocks go into fractions of cents, bro, and some accounts allow you to buy fractions. Part of the reason that I was in Share Builder, you could get fractions, didn't have to do whole shares. So I'd buy 100, I'd get 107.25834. Well, that would add up every month. Those fractions would grow into whole shares as I kept stacking, right? And I didn't have to wait for the next number to get a whole share. Convenience. I like that. I'm not going to say almost every type of investment platform now allows fractional shares. Some of them are options that you have to go in and turn on. I don't know. I didn't master all these. Learn the platform you're going to do. Robinhood does fractions, but I don't know how they do fractions. Also, I don't want to do fractions. Why? I want whole shares. I'm trying to get to hundreds. And when I sell, when I get out of a stock, I don't want to have 0.2317 of a share left over. I want the whole thing. When I'm ready to liquidate out the stock, I want it all gone without having like residue, if that makes sense. So what you do here is you're like, oh, I want 100 shares. Okay, that's 23.36. If I can't do it right now because I don't have the money, right? But if I were to review order, you don't have enough money, obviously. What this would tell me is, hey, you're not locking in at 23.26. Somebody out there right now has an ask, okay, bid out there. And so the 23.26 is where the stock value is at. That does not mean that that is where the bids are at, okay? So somebody's bidding saying, hey, I will sell at this number. And as soon as you put something in, we are going to look for the closest bid. There's variance. Plus, it's going to take time. Well, you just saw we went from 23.26 to 23.00. That impacts, right? So when you do this, you actually need more money than it says. Instead of $23.03, I would probably need to have 24, maybe 24.50 in my account to trigger this trade. And then I'm going to get something close to 23 cents per share. Well, that's not very fine-tuned, is it? No, it's not. So what do? Buy order limit, and all that's telling me is what this was. Hey, you're just putting it out, and if you get a price that's close, we're going to execute for you. We don't want that. We want limit order. Really, you like stuff like stop losses, trailing stop. This stuff is more advanced, all right? All you really need is limit order. Stop loss just helps you not absorb big losses, right? It's going to cut early for you. But we're just going to limit order. With limit order, I select the price I'm going to pay. I'm going to get that price or less. How less? Well, I just told you that stocks really buy and sell off bidding systems, right? So even if the price hits the number that I put here, right? Somebody might have a bid to sell it for even less. And the way it's going to work is it's going to take, if I'm selling the stock, it's going to give me the best price that somebody out there is that is bidding. And if I'm buying the price, it's going to look for me the best price for me that someone is bidding. It's going to knock those off. And those are on the edges. There are going to be less of those than the others. All right. And then that's how this thing goes from a bigger swing to a smaller swing to a smaller swing, because you're buying on those extremes off of the bids. But we can't really time that. And there are bigger companies, there are bigger people out there with bigger wallets who are buying a lot more. So those edges can evaporate instantly, right? Here we lock in what we'll pay at. And then you have things like market hours, extended hours, okay, just today, indefinitely, which isn't really indefinitely. You see this would expire on May 5th, but we are in February 5th. That's 3 months. That's 90 days. That's a long time for it to be waiting to see if my parameters on limit price get hit. Now with this, 100 shares, right? Well, it's only going to buy if I get 100 shares. So in other words, if I got a limit price of 0.21 for 100 shares, okay, $21, right? That's what I'm saying I'll spend. I might get my 100 shares for a little less than 21 or right at 21. Okay, boom, boom, very nice. But if there's only 98 shares on the market for 21, it's not buying any. It's not going to buy 98 and then wait and look around for another 2 and then buy again. You're going to get it in this one lot. Now, in Webull, I think there are ways to set it up where it doesn't do the whole block. So every time it dips and it hits your number, it's buying. It's buying however much of it can, however much of it is available to fill your order. And it fills your order over time that way. If there's 100, if your whole block is there, it buys the whole block. If your whole block's not there, it's buying anyways and waiting and looking and waiting. And oh, there it goes again, and bringing more in until it gets you your whole lot. Okay? You need to know which one you're involved in and if your platform offers such thing. I don't even know if Robinhood does that. It might. I know for a fact that Webull did. I can't say they do now. I haven't been on Webull in years. But Webull did do that. And you could just watch it, and every time it would dip, you would get more and more shares until your full order was filled. There's probably terms for this. I don't know the terms for this, but I work with limit orders. Now you see down here, trade Edgio options, and we will see that for a moment, I tried to do that with Edgio, but then I looked, and I should have looked first, and man, open interest. Like the volatility is here for this to be interesting, but we're so far away from $1. Who is going to pay me to get Edgio when Edgio is not going to hit $1? Or actually, the strike price is $2.50. That's even more insane. Like if the strike was $1, maybe still not likely. So I was dumb to buy Edgio in the first place because I was never going to get a call option for Edgio. Okay. Told you, I'm here for the transparency. I bought the wrong stock for the idea I was going to have. Where was that? Notifications, right? Notifications. View all your notifications. Edgio. So what did we do? We bought 200 shares at 24 cents. We spent 48 of my $50. So there's still $2 buying power in the account. Okay. Well, what's this? You canceled your order to sell 2 open contracts of Edgio. So what I did, I got my 200 shares, that's enough for 2 blocks, and I went to put up calls. And when it dawned upon me, nobody's going to give me money to potentially buy my Edgio. They'll give me money to buy my Edgio, but they're not going to give me money to potentially buy it at $2.50 a share. Okay, also what does that mean? We see I spent $48. So each order says, hey, I will pay you $2.50 per share for your 100 shares. Right, now you see why we're at 24 cents. This is over 10 times. Nobody's doing that. Nobody's taking that kind of risk. That's a crazy risk. All right. But that's what it means. Well, what do they have to do? They have to give you a premium to do this. So on the front end, it's going to be like 10 cents a share. Well, you got to multiply that 10 cents by 100. right? Boom. And then they pay you that premium up front. And that's a contract now between you and them saying, if it hits this price or better, I get to buy it at this price. That's the stake price. That's what that 250 is. So somebody, in theory, was supposed to give me money. Not on this. If anybody would give me money on this, it would have been dumb. That would have been a very bad strategy by them to buy my call that I'm selling here. And nobody did, okay? But this contract would be saying, by the time the 16th of February come around, anytime in this window between now and the 16th of February, if the price of EGIO hits 250 or better, I can instantly call on you. Oh, it's called a call order to sell me those 100 shares for $2.50 each. Well, why is he doing that? Because it blew up and went to $4. Now he's going to instantly buy it and sell it at $4. So he's going to make his $1.50 profit. And I'm going to make my 48 cents to 250, my 202 on 100. Yeah, that wasn't going to happen. We're talking some unrealistic numbers here, but that was the idea. So I put the call orders up. Obviously, nobody called. Finally, it's like, forget this. It's not showing. See here where it says you can get more details. Like, I probably did not buy this at 24, and we know I didn't. Well, how do we know? Because we can go to the view order right here. How far down does this go? I did a lot of remark. We got to get to the edge. So what I really bought it at was 0.244. So it cost me $48.80. 0.244. Not just the 0.24 that we have in here, right? Then you slide up here, and what I sold at was 0.255. So let's go here. We buy 100 EGIO at 0.244. Buy. We put in the call order, whatever. Boom. We sell 100 EGIO at, and then what did we say? The sell limit sell 255. So we got 1 cent, but not just 1 cent, 1.1 cent. Yeah, and I saw extra 10% there. Per share over 100 shares, except I got this wrong. We didn't buy 100 shares, guys. We bought 200 shares. So this is it. This is, we're in, we're out, it's clean, it's over and done. We turned 48.80 into 51. We should put that up there, right? 48.80 is what it cost me. Since that's a cost, I'm going to put it in these, right? And then when we sold and got it for 51. Boom. Which tells us that we made put a positive here, 220 profit, $2.20 profit on that 50. It's not huge, it's not earth-shattering, but it's a win, all right? And let's look at the timing. We bought on the 22nd, we sold on the 26th. We should probably have that information, right? We're going to keep it with one stock at a time. So the only things under this line is going to be the EGIO trades. And also you wouldn't use Notepad, you would probably use some sort of spreadsheet, okay? But just giving you an idea of how you might want to track your stuff. So I would put the buy date here, which was 2/14. I like doing this dating system. And then we sell, did I get the date right? 22. My buy was 22. Sorry, not 14, 22. And then my sell for Geo was 26. Also, this was January, so I need to switch that. That's why yep. So we have a buy order executed for 200 on the 22nd of January of 2024 for EGIO at 24.4. 48.80 total cost. We flipped that on 26 January, a sell order for 200 EDIO at 25.5. We turned 48.80 into 51. That's a $2.20 trade. Woohoo! We won. Big money, popping bottles. Where's my Learjet? We're ready to go. But here's the important thing. Guys, one, I went into a stupid trade on a company I didn't know anything about because I was trying to get call options. Not the worst of things if you know that the reason you're getting into it is because of call options. Because options are very specific things. You're looking for stocks with volatility and flow, which means that they move up and down. They fluctuate a lot. That's what drives people to go in and pay you a premium to buy at a higher rate than it's at now because they think it'll go even higher than the strike price that they're offering on, right? So you need volatility. But we're so far away from the strike price that it's not happening. This was a bad stock for me to get involved with. I got very lucky to walk out of this with any gain at all. Okay? This was stupid. This was dumb. Don't do this. But understand, I was just trying to flip a couple call options, bro. Well, why was I trying to flip a couple call options? Well, we're about to get into that now. But that's my first stock trade of 2024, and this will winner chicken dinner. Also, here's what I need you to understand. $2.20 is not a lot of money. What we're talking about, put $50 into this account, right? $50 is what I put into this account. Now I have $52.20, okay? So I'm up on percentage. If I can just make that happen 2 or 3 times a week, obviously it took me 4 days for this flip, but this is why people day trade, man. If they can get this, but they can get this 100 times a day, they just made $2 and they just made $2.20 a trade 100 times, $220 a day. Okay, now we're talking. And that's why you need something that's volatile. So it hits the market dips. It hits the market dips so that you're buying and you're selling. You're buying and you're selling. Constant, more and more and more. The more trades you get in, the more money you make, right? So this is what happens when you're Joe broke. You make a $2.20 trade. Somebody with money would have done this. Well, they wouldn't have done this. They'd have picked a better vehicle for what they were doing. But if they had done this, they wouldn't have bought 200. They'd have bought 20,000. Or they would have bought 1,000 or whatever, and then flipped it multiple times throughout the day through some parameters that they had set, right? So that you're multiplying this by the amount of trades. Or you're multiplying this, which is going to make all of this that much higher, right? But the important thing is you get out more than you put in. We won on the first one. All right, well, now let's go to Mark, which is Remark. All right. Well, Brad, tell me about Remark. What? Ooh, I don't fucking know. Okay. Well, why? Why, Brad? You just told us don't do that. Because again, same thing. I'm not looking to invest in this company. I am looking to trade calls. All right. Now you see here, I put in another 50. So now we put 100 up, right? We put $100 total in. No, here it is. Here's the extra. So that's not going to happen until the 2nd. All right. I've got my dates right now. So let's go take a look. Again, I'm operating on $50. Well, now I'm thinking, dude, that stock sucks. I'm never going to be able to sell options on that stock. And I can't get, this stock actually has options working, but I can't get 100 shares. So now I've got to go into flip mode, right? So now we're looking and we do a buy order. That's a limit buy. Y'all this is way too big, homie. Way too big. Boom. Get this out of the way. Hey, Caribbean Vibes, what is up? Welcome to the live stream, man. We're just going over some transparency on a very small stock account that I have for Robinhood for my 2024 trading, which has just started at the end of last month. We're probably going to do this, well, every time I do anything with the account, I guess. Normally this is mostly I do gaming. I stream a little Twitch, a little Kick, but now I'm streaming on YouTube. We're just getting the uploads right into YouTube. So mainly I do gaming, but stocks is something I've done in my life So I just wanted to be transparent and show people what I've got, what I've been doing. All right, so this time it was Remark. Again, we don't know anything about Remark. We don't care anything about Remark. We're trying to get 100 shares of Remark so that we can get into the options game. That's what we're doing here. And this is why I say this is not financial advice. Should you be buying stocks you know anything about? No, no, you should not. So this is not financial advice, but I'm just showing you the process of what I've done for education and entertainment. But I have no idea what you're doing. Well, hopefully I do a good job of explaining. I just went through my first trade up here, all the mistakes that were made and the little bit of meager money that we made off of that. So the idea I've explained, and it'll be seen in the video, is that I need 100 shares of whatever stock I'm looking at to be able to sell options calls, which is, this is going to fall under trading instead of investing, and this will fall under, I don't know, well, options trading, literally, is what it's going to fall under. So it's not swing trading, it's not day trading. However, to get to the 100 shares I need, since I'm working with such small money, I'm just starting to go into stocks. Oh, this little heart's over there. Trade and crypto. Be careful. Be careful of all of it. Be careful of all of it. You have to be more careful with crypto. With crypto, I did a little bit of crypto. I did a little bit of mining. I did satellite mining, actually. I should say radio mining instead of satellite mining. I did radio mining. Why radio mining? It's cheaper, way less on the electricity, okay? So, and the company that I went with, their coin is going to be used within their ecosystem. So the coin has a use, right? There's a couple places that you can spend Ethereum. There's a couple places that you can spend Bitcoin, right? But most of these coins don't have a use. They're just trying to replace the dollar. They're just trying to replace the yen, the peso. Good luck going to McDonald's and paying with your crypto, right? So you need to find something where there's a utility for the coin, where the coin has a purpose. That way there's a reason for people to use the coins. But that's besides the point. Again, I'm not here for actual financial advice. I'm not certified to give actual financial advice. But yeah, I did helium mining. And then helium did all right for a while. And they was like, hey, we're going to dilute so that more people will come in because the price point's moving up to like $15 and we're scaring some people away. Dude, no, you're not. No, you're not. People buy Bitcoin at $35,000. Your $15 isn't going to stop people from going in on helium. It's not. It's not. And then ever since they decided to go that route, like it tanked hard. Like it tanked real hard. Don't know why. Didn't really look into it that much anymore. But then I moved, didn't bring my miner with me, so we are out of helium. All right, here we go. With Mark, remember, I flipped. I brought in 50. I got a little more. Well, not like I'm not. As in, I'm not going to tell you buy this at this rate and you're going to make money. What I'm going to do is give you my experience, what I have done, and I'm not going to tell you to directly do anything because I can't. No, you're not allowed. That would be big trouble, even though people do that anyways. So what we did here is we went in and we got, I don't want to download anything. We've got the numbers I'm looking for here. Because we're looking for specific. We don't want to stop at 72. We want to see what I bought. So on 31 Jan of 24, we did a buy order for not a beautiful 100 lot, 62 Mark at 72, almost 73. Okay. Well, what are we doing? Well, what we're doing is we're praying to the stock gods. Oh, and I messed up. I think I just did a limit. Yeah, I did. I think I did the wrong buy here. So I didn't even get the price I wanted. Remember, we want to make sure. No. We benefited greatly here. I put a limit price on and the floor dropped out and I got much better than what my limit price was going to be. So instead of spending what I thought was going to be all of my money, that's why I could get 10 shares here. Because it tanked so quickly, I got it at this better price instead of this dumb price. And we started out at 72.85 instead of at 84. I got super lucky here. This automatically, all right, so what this number is right here, this is called your cost basis or your average cost per share. That's very important. So instead of getting in at 84, I actually got in at just under 73. That's amazing. Super lucky for me. Now we spent, this is money out, so you bracket. Boom, right there. Well, I had leftover money because it didn't cost me as much to fill these 62 shares. So we re-up. We come back in right on 31 Jan because I'm looking and I'm like, yo, there's more money than I'm supposed to have. What happened? That's what happened. And then we buy and we can squeeze out 10 more shares of Mark and we can get that at 709. Well, 709 is under 7285, right? That's beautiful. Once again, we bought though, so this is 709. So what do we do with this? How do we get our new cost basis? Because it's not 7285 anymore. You take your 45.17, you add your new cost, your 709. You have spent $52.56 now on marked shares at 2 different times. You go, well, how many shares do I have? You have 62 plus 10, obviously, 72 shares. My new cost basis, and we're going to put the new cost basis over here. Let me cost basis. So here my cost basis is just what it is, 7285. But now we got some maths going on because some stuff has happened. So now the new cost basis is 7258. We've shifted it down, which means here if I would have sold at 75 cents, I would make less than here if I sell at 75 cents. This is why it's important to get a cost basis. This is why as the stock goes down, you're steadily buying to reset your floor, unless you think the stock is just tanking, right? I'm not too much into crypto right now. I'm more about stocks and trades. Personally, I think that's better. Some cryptos have done really good. I'm not going to deny that there's probably future utility for cryptos, but that's the main thing. If you're going to get into crypto, it needs to have utility. Otherwise, what are people getting the coins for? They're getting the coins to speculate. All right, so I only have 72 shares. But we have a problem. I need 100 shares because the whole point of doing this is I'm trying to get into calls, right? So I had a couple limit sells here that I set. We'll take a look. Oh, limit price, $1. I'll sell at $1. Boy, that would have been nice, huh? Okay, no. This was a buy. So now I've got like a little bit left over, and I'm trying to get more. So we're looking to flip. Here is another canceled. We're not so much worried about the cancels. Here is the first real thing that happened. So you see that I had some indecisiveness. I'm fluctuating around. Hey, I'll just hold, come back in a few weeks and see if it went to $1. And, you know, I made a good flip. Well, I got impatient because I didn't want to do that. I'm here to try to get into the calls. Remember, the new cost basis is 72. So here on 1 Feb, just the very next day, 24, we do a sell. This is going to bug me. Sorry, this is going to bug me. Everything else is not in block, so you are not in block. And now you need to be 2 space so you can be 1. Formatting. I'm sorry. All right, so 62, 60, 70, 72. How do I have 86 shares? Wait a minute. We've missed something. $62, 72. Cancel. I should have 72. Oh, this is a buy order. Okay. Oh, okay. So I put 50 in. The 50 doesn't clear until the 2nd, but the 50 is available today. So this is what this is, guys. We're not lost. We're not lost at all. We are doing a buy order with the new $50 that I threw in because, damn it, I need 100 shares. Well, flipping wasn't happening for me fast enough. What did I do? I put more money in. So we went from 50 flat to 100 flat is what we've invested. Well, here we got 86 shares. Well, I'm at 72. That's going to put me at 158. We clear. We're going to have 100. We're going to have leftover. Mark at, woo! Guys, the price dropped. We got this at 57.59. Now, what some people would do is they would take their 72 shares. They would say, this stock is tanking. They would sell. They would eat that loss. They would move on to the next deal. What I did is said, hey, guys, put another 50 in and we're buying. So we got this for 49.53. Almost the whole 50 I put in. This ate almost the whole 50. Like we're swinging for it. But what this has now done is, one, it's given me the 100 shares that I've been looking for. But two, it's adjusted my cost basis. All right, well, how has it done that? 45.17 plus 709 plus 49.53. We have spent 101.79. I've only put in 100. So we spent $1.79 more than I put in. That's possible because of the EGIO trade. Now we're going to divide 60, 70, 158. That's how many shares I have. I have 158 shares. Boom. That means this cost basis is now 64.42. We're only going to go 4 digits with it. I will round up on the digit if the 5th digit is over 5. We went from 60, we cut a whole 8 and 8.43 off of our cost basis. That's huge. That's going to add up for us. But the important thing is we now have 100 shares. Well, why does that matter? Boom. Mark. Hey, look what we're doing. We're selling a call. Now the formatting on this is going to be a little weird. Instantly, as soon as I got, I'm going to put sell call, SC. So we know this is a sell. We know this is a call. Because it's a call, we know it has to be 100. I really didn't have to put mark here every time. And our strike price is what the at is going to be. All right. Well, they're going to buy at $1 a share. So what just happened? What the hell is this? Well, we went over it in the beginning, but now we're going to do it in real time. What I am doing is I am creating a contract. I'm saying, hey, everybody on here, I have 100 shares of Mark. And you can give me a premium to go ahead and have a contract with me that says if the price exceeds $1, I can call on you at any time to sell me those shares. So far, everything sounds like a win to me. You're going to pay me. My average cost is 64 cents. If it goes up past $1, I'm going to make 35.5 cents per share. Yes, please. You can have that, Mark. But where their betting is, it doesn't go just to $1 or $1.01. Their betting goes to $1.25, $1.50, so that they flip as well, and that they're making profit on their sell as soon as they call my order. This is what I want. On the one hand, I never want my contract to be executed. What does that mean? I want this thing to go up, tantalize, but I never want it to go over $1, because next month, every cycle I get, I want to do another call order. Well, why? Because what they had to pay me, premium, they had to give me $10 for this contract. So instantly, $10 hits my account. And they're locked in now with the option, that's why it's called option trading, to call if the strike mark, $1 a share, is hit. To call on me to sell them those shares. Boom. That's what they're allowed to do. So there's a whole $110 that they're looking at, because they're going to have to pay me the $1 a share. They pay me the $10 premium. So they need this stock to go over $1.10 a share. They need to go to $1.25, $1.50 to really make money, because they're paying 110 total. I'm getting 10 right now. I'll get the other 100 if it hits $1 a mark. I never want it to hit the $1 a mark. I'm not going to say never. I'm not going to say never. I want people to keep paying me premiums, and I want to keep taking those premiums and using that to make more money. So we got our call option. We're super happy. Now again, we had 60, 140, 158, but now we have 100 shares locked up. So we're basically sitting on 58 shares now. Well, what are we going to do with 58 shares? Well, the first thing we're going to do is, we just got paid $10, guys. We got paid $10. And if I want 100 shares, I probably want 200 shares. and we're sitting at 58. So we go ahead and we do all of this on February 1. We do another buy with the $10 that just came in to pick up 17 of Mark at, hey, 59.18. 59.18 is lower than 64.42. 64.42 is my current average cost per share. We're about to drop this again. You keep wanting to get your cost basis as low as you can, because then it gives you more room to work. Gives you more profit potential. All right, so this cost me $10.06. That's the $10 that we just got from the trading and some left off from the selling right here of the call, and then 6 cents left over. And let's bring back a little set lines up. Boom. Now we have a new cost basis. I'm going to run the numbers again. I should really put trailing numbers here, but then this gets really wide. So 45.17, 709, 49.53, 10.06. We have spent 111.85. What do we have? 60, 70, 80, 160, 168, 175. Nice. We have 175 shares. I've hit the wrong button somewhere. Yes, I have. That was supposed to be... All right, well, now we have to do that again. See, guys, you don't even have to be highly intelligent. You can click wrong numbers on calculators, for instance. Just don't click wrong numbers on calculators when you're actually executing trade. Okay? You need to be very precise at that point. 111.85. 60, 70, 80, 160, 168, 175 divided by 175. See, that's the one you want. Now we've worked our cost basis down. 91, that's a 4, not a 5, so it sticks. Boom, here you go. We went from 72.85, which I offered 84 on, and the market kind of fell out, and I got a nice little swoon, to 63.91. All right, well, what's the next thing that happened? We can move this again. We just did the buy. Now I'm doing a limit sell. Why? Because I have a block of 75 shares. 75 shares is not 100 shares. We want another block of 100. So what we did is on February 2, 24, and see, I'm showing you every step of the way, every transaction that was made, not hiding anything. If something bad happens, I'm showing you the bad. And this is what a lot of people don't do on the internet. They only show you the wins. I'm going to show you everything. And we do a sell. I'm getting my formatting wrong again. I don't know why it bothers me so much. We sell 75 mark at, and then we sell it at, oh, actually a straight 0.75, no hangover. Which means, nope, we didn't pay this time. We got paid. Just like our premium here where we got paid, don't bracket this. 56.25, boom. 56.25 coming at us for these 75 shares. We got it. 63.9, let's call it 64 for easy math, 75, 11 cents a share profit on these 75 shares. We like that. That's good. So what did we do with that? Okay, the 50 that I put in finally cleared. It's officially here, but you get to use it before it actually clears. So the next thing we did, we turned 75 shares into 94 shares. We got 56.25, right? So we come here on February 24 with a buy for 94 shares of mark at a dead on even 60 cents. No hangovers there. That cost us 56.40. So the 56.25 we got, and of course then we had 15 cents laying around extra in our buying power. We flipped 74 shares into 93 shares and almost 94 shares, took a little pocket change, 94 shares. That's what you're wanting. We're getting very close to that second 100 lot so that we can do this and farm premiums again. All right, well, we're here. Now what? Well, we're not at 100, so what do? We get the price that we're looking for, and we fire again. 02 on Feb 24. Notice all this is happening in the same day. So what I'm engaging in right now technically is day trading, right? Every day I'm making moves. We're not here to day trade, but I'm having to day trade to get another stack of 100. We sell the 94. Remember, the 100 is locked in. We can't touch the 100. I've got 194 shares. We're selling all of the excess shares. And we're selling this at an even 65 cents a share, which means 61.1. We might have noticed that I did not put my parentheses here, and we want to get that. Did you note that money went out? So we turned 56.40 into 61.10. That's what we did. Also, what I didn't do is I did not readjust the cost basis. So now we only have 100 shares, okay? That's all we have. But we started with 45.17, and we're just got almost our 100 shares for the second lot. We have our buy order in. I'm saying, guys, if the price goes down to 60 cents, I will buy for $60 the whole 100 quantity, and that's going to put us up to a 200 block, and we're going to be good to go. I'm going to look instantly for a sell on a call order and get the premiums. Then what we're going to do, the same thing I did before. We're just going to be working, unfortunately, with much smaller carryover. We're going to take the premium. We're going to buy the stock. We're going to flip those 17 to 20 shares repeatedly as much as we can to try to get another 100. Now that process is probably going to take a while because here I put in an extra 50. So we shot, from 72, we needed 28. We were able to buy 86. That left us with like the 56 left over. This next time is going to be much harder on all these flips because we're going to be starting with like 10 to 17 shares. You're not going to be making much each time. But we can see that every step of the way I've sold for more than I bought. I've done this with the goal of acquiring another 100. The next time that we sell, we are going to have, the next time that we buy, this sell is already done. Next time that we buy, we're going to have 200 shares. We're going to have our 2 lots, and we're going to be firing off on 2 call orders. So that is where we're at currently. This is where we're going to end the stream because this is all the action that we've done. But what I will do before we end the stream, we'll go to investing, and we're going to take a look where we at. We're currently at 65 cents. I needed to drop to 60 to pick up my 100 shares. We're not going to rush. We're also not going to short ourselves. We're not going to say, well, 61 and flip it again. No, I flipped enough. We're going to get our 60. We're going to get our 100. We're going to be happy. All right, well, what else do we need to know? We need to know that I put $100 in. And I did that on the 31st, on the 22nd of January. Not the whole 100, but since the 22nd of January, I put $100 in. And we know that my account is at 117.52. So I'm up $17.52. Part of that is a big fat $10 premium on my 100 block, right? That's part of it. Well, all of this is all of this, right? This is everything. I only have a buying power of $1.35, so we're not going to be able to squeeze another couple of shares, but that's fine. So we're up $17.53, and if this drops to 60, we're going to buy. The reason that it says $1.35 is because this call is locked in, right? No, that's the call. It's because my buy order is locked in. That money's already set aside so that when the 60 happens, it goes. Otherwise, I'd have that $60 here as well, right? So that's the plan, guys. We're up 17, 18. It's going to fluctuate. But we kind of don't want to be up 18. Why don't you want to be up 18? Because I needed to go down to 60, and that's going to cost me 5 cents a share for that to happen. So we needed to go down, which is going to affect this negatively. But in doing so, it's going to give me another 100 shares. And then I'm going to put the call order up, and we're going to farm calls off that. We're going to have some leftover because we're going to get paid to do that, the premium. That premium is going to buy stocks, hopefully, below here so that we continue to lower our cost basis. And then every time it goes up to 60 to more than my cost basis, I'm flipping the extra. We flip the excess until we get another 100. That's how it goes, guys. That's every trade of 2024 for me so far. Working on call options, working on selling call options as my method, but having to use a little bit of day trading in the colloquial sense to achieve those 100 stacks so that we can get there. I'll probably go into dividend investing later on, but I'm not doing any dividends right now on Robinhood. So I don't have any of that material to work with you on. And I don't want to deal on hypotheticals. I want to work on what I'm actually doing, right? Oh, here's the key. Remember the first trade with EGIO, I said 22, $2.20 profit. That's not big, but what you're looking at is 8.64% up there in the top left, right? Or if we go 1 month, 17.24%. Now this is for my account, right? Boom. This is for my account. This isn't stocks in general. So I am up 17.24%, 17.16, going to keep fluctuating in this past month, which has been 22, 9, 14, 15 days, half a month. In half a month, I'm up 17.15%. Can't promise you these returns. I'm not telling you that this is how you get these returns. I'm not even actually looking for returns right now. I'm looking to stack 100 lots so I can sell premiums. That's what I'm looking for. And for that to happen, I do need the price to fluctuate. It can't just be straight up. But I'm working on my second lot of 100 and I'm up 17% in half a month. That's insane. That's also a rate that's not going to sustain, right? I'm not going to keep making 17% every 15 days. That's not going to happen. But that's a pretty wild number. All right, guys, this is Climb to One. This has been some stock information, not stock advice, transparency, education, maybe some entertainment. Don't do what I do. Listen to what I say. Research. Make your own decisions. And why listen to what I say? Because I'm going to tell you the mistakes I make and the good things I do. Okay, I'm going to give it all to you. I'm not giving you a roadmap. I'm not telling you how to go into the stock game and make a lot of money. Okay, no. I'm just showing you my journey and what I have done in 2024 and moving forward. That's what this is. Okay, you're grown. You're adults. Research, educate yourself, make your own decisions. All right, boom. But it's been real. It's been fun. This is the Climb to One.